Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guide with this month's industry update. The automotive industry in June was firing on all cylinders. New vehicle sales reached their strongest pace since 2007, auto dealers recorded strong profit growth, and used cars continued to be in strong demand with sales at a healthy pace while prices outperformed normal seasonal declines. Used prices, after falling by 2.1% in May, declined a scant 1.1% in June, a figure in line with NADA's 1.3% forecast and one well below the expected decline for this time of year. This resulted in an improvement in NADA's Used Vehicle Price Index, which monitors prices for vehicles up to 8 years old. Across segments, losses for the month were predominantly better than what was observed in May. This was particularly true for compact and mid-sized cars, where depreciation eased from a combined rate of 3.2% in May to about 2% in June. Prices for the majority of remaining segments fell within a tight range of 0.6 to 1.2%, with large pickups and large SUVs continuing to outperform the market with prices essentially flat compared to last month. Over the course of the year, NADA has observed a more traditional seasonal pattern, with values showing increases in the first quarter and moderate declines through the summer months. The big difference between 2012 and from a historical perspective is that both the uptick in spring and the downturn in summer has been more muted, with much less volatility in prices than expected. When combined, vehicles up to 8 years in age carried an average price of about $16,000 over the first 6 months of the year, a figure nearly identical to 2012's midpoint average of $15,900, and one almost $600 higher than 2011's average of about $15,250. Although prices at a market level changed little over the first half of the year, there were more pronounced shifts at a segment level. The most pronounced change occurred in pickup and large SUV segments, with this year's price performance nearly 8% higher than an already strong 2012. Housing demand has been the driving force behind this improvement. In fact, a survey conducted by C&W Research showed that the percentage of new truck sales by contractors represented over 51% of the market, a number not seen since 1985. Manufacturers are taking advantage of the strong demand by supporting additional sales through incentives. According to Autodata, incentives for GM's outgoing large pickups are up by about 10% to $5,500, and incentives for the Ford F-150 are up by about 25% to about $3,500. Meanwhile, Ram incentives are down nearly 12%, while sales are up 19%, indicating that price is not the driver of the strong sales we are witnessing on the new vehicle side. Used supply is also a contributor to the strong prices for used pickups. While late model large pickup volume is expected to grow by 6% this year, supply in general will still remain tight. As for the overall industry, the supply of units up to 8 years in age is expected to decline by 3%, but supply for units to 3 years in age is expected to grow by 8%. The late model supply will continue to apply downward pressure to used vehicle prices, and we are seeing the effects in the form of seasonal declines in used car values. However, gradual improvements in the economy, lower or at least stable gasoline prices, and a healing housing market will keep demand for new and used vehicles strong for the remainder of the year. When viewed as a collective, market conditions for the remainder of the year are predominantly favorable. At the start of the year, NADA predicted that average prices of vehicles up to 8 years in age would slip by about 1% relative to last year's level. However, based on the trends we have witnessed through the first half of the year, NADA now expects to see 2013 end with prices equal to the strong market we experienced in 2012. For more detailed information on NADA's forecast and market overview, please read this month's guidelines available on our website. Thank you.